At some point, every trader asks the same question. Is there actually a strategy that works, or is this all just luck? I wondered that same question, and after testing over 20 different strategies, I found one that actually works consistently, even in different markets. And today, I'm going to show you exactly how to use it with real examples across crypto, forex, and even gold. Now, before we get into it, I want to be real with you. I'm not going to promise you you'll never lose a trade, because that's not realistic. What I'll show you is a system with a clear edge, a system that's rule-based and simple to follow. All you need is one candle. And I know that sounds almost too simple, but trust me, because the results speak for themselves. So this strategy is built around something called the 4-hour range. The idea is that every trading day, the very first 4-hour candle that forms gives you something incredibly valuable, a high and a low. That range becomes your map for the entire day. When you zoom into a lower time frame like the 5-minute chart, you'll use that range to find high probability entry points. The reason this works is because the market is consistently pushing against key levels and reacting to them, and that first 4-hour candle captures exactly where that pressure was concentrated. And the reason why the strategy has such a strong edge is the logic behind it. When price breaks out of a range and then pulls back inside, it tells you that the breakout failed. Smart money got trapped on the wrong side, and when that happens, price tends to move hard in the other direction. Lucky for us, this creates one of the most reliable setups in all of trading. So the whole strategy comes down to a simple 3-step checklist. Step 1 is marking out the range. Open your chart, set the time frame to 4 hours. This next part is important. You need to set your time zone to New York time. You want to be consistent with the session you're using, and New York time gives you a clean, reliable starting point every single day. So make sure to set your time zone to New York time. Once that's done, find the first 4-hour candle that formed. Draw a line at its high and a line at its low, and extend both lines right across to the rest of the day. That's your range, that's your battlefield. One thing to keep in mind, only mark the range after the candle has fully closed. If the candle is still forming, just wait. You never want to be working off an incomplete candle. Now, this next step is where the money is actually made, but you need to follow the process carefully for it to actually work. Step 2 is where we find the setup. First, you switch down to the 5-minute chart. From here, you're watching and waiting for 2 specific things to happen in sequence. You're looking for a 5-minute candle to close outside the range, either above the high or below the low. The wicks don't count. The body of the candle must close outside. Secondly, after that close outside, you need to see another candle reverse and close inside the range. This confirms that the breakout failed. The market tried to go one way, couldn't hold it, and now it's reversing. That's the signal. And remember, both of these things need to happen within the same trading day as the range you marked. Once the day ends, you start fresh the next day. But you will still lose money if you mess up your entry. Let's cover that next. Step 3 is the entry. The rule is simple. If price broke above the range high and then closed back inside, you go short. If price broke below the range low and then closed back inside, you go long. Your stop loss goes at the extreme of the breakout move. The highest wick if you're going short, the lowest wick if you're going long. Now, this last part is very important to keep your profitability consistent. Your take profit always needs to be 2R. This means your take profit is twice the size of your stop loss. So if your stop is 10 points away, your target should be 20 points away. Now let's look at some live examples. Alright, let's look at some real examples, starting with crypto. Here on the Bitcoin 5-minute chart, we've already got our 4-hour range marked. You can see the levels clearly. Now watch what happens. Price pushes down and the candle closes below the range low. That's our first signal. Then shortly after, price closes back inside the range. That's our confirmation. Since price broke the low, this is a long entry. Stop goes at the bottom of that breakout candle. Take profit set at 2R, and just like that, price moves up and hits the target. Clean 2R profit. But here's one thing I want to highlight because it shows something super important. Price made a very large breakout below the range low before re-entering. In that case, if we place our stop at the absolute low, it will be massive, and that kills our profit ratio. So instead, look for the nearest key level between the re-entry candle and that extreme low. A small support level or a consolidation zone, anything that gives you a tighter, more logical stop. Now, I'm also going to show you a losing trade because I want to be transparent with you. Price broke the low, re-entered, that's a long setup, and price just didn't follow through. It came back down and hit the stop. That's a 1R loss. I'm going to be honest with you, that's going to happen sometimes. No strategy wins every single trade, and anyone who tells you otherwise is lying to you. The edge comes from taking every valid setup consistently so the win rate plays out over time. Now let's look at forex. Euro USD 5-minute chart, range already marked. Price closes above the range high and then comes back inside. Short entry. Stop at the highs. First trade hits the stop. That's another 1 hour loss. It happens, but then price gives another short setup almost immediately after. Same rules. Stop at the highs. Target 2 hour. This time it hits 2 hour gain. Gold is a bit more volatile, so let's see how the strategy holds up. The range is marked, price breaks below the range, trades outside for a bit, then closes back inside. What is that? Exactly, that's a long entry. But because the breakout was so large, we use the nearby support as our stop level instead of the absolute low. Target at 2 hour, price hits it. Shortly after, price breaks above the high, closes back inside. That's a correct. That's a short entry. Stop at the highs. This one hits the stop, 1 hour loss. So across 3 completely different markets, this strategy produced consistent results using nothing but a simple candle range and a 3-step checklist. And I personally like this strategy because it's purely rule-based. But remember, what you've seen today is the most basic version of this strategy. Don't be afraid to layer this on top of other strategies like trend analysis, support and resistance, and make this even stronger. So I highly recommend you actually backtest this for yourself. In order to do that, head to the link down below and get a 30-day free trial to TradingView. Those are the charts I use. Also, using my link gets you a $15 bonus towards your first plan. So click the link and start going through some real examples. Practice marking the ranges, finding the setups, and tracking your results over at least 30 or 50 trades to collect data. The more data you collect, the more confident you'll actually be pulling the trigger when a real setup shows up. Don't forget to like and comment on this video. If you want to see another strategy broken down just like this, click this video on screen now.